Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, March 31st, 2020. And our top stories today: the coronavirus revives Facebook as a news powerhouse, and Silicon Valley begins to shed jobs. Well, joining me now is Dan Klein, Senior Technology and Consumer Products Reporter with the Motley Fool. Hi, Dan. How are you?
Hey there, Jeff. Sorry about the modified setup. My cameras are in the office. We've been doing a lot of live feeds, and moving things around has been a challenge. So I'm sort of hotel rooming it off my laptop computer today.
I don't think you have to apologize. I think many Americans, I've been looking at the media every once in a while because, I do a show, you do a show, and so I don't have time always to watch other people's things. But I know a lot of people are kind of doing what we're doing, which is utilizing Skype and Zoom from their homes in order to avoid the spread. So I think we've started a trend, Dan. I'm just going to say that. I think we've started a trend here on the network.
I think that's going to be a lasting change. I've always found it absurd. I watch Get Up, the sports show on ESPN at 8 in the morning, and there'll be like 10 people sitting around a table, but like one of them will talk for like 18 seconds in the hour. Like that guy can't be at home via Skype. I do think you're going to see more media companies invest in better technology. And one of the challenges I've had is internet speeds can be compromised. So I've had to go to my office, which luckily is deserted, and I have a private office, so it's safe. And I can plug into the Ethernet there to get sort of just a good enough picture. Not an issue here at 10 in the morning, but if I'm doing something at 6 at night where everyone is sitting down to watch Netflix or whatever, the internet becomes very tight. And I do think we're going to see companies invest in dedicated lines and other things for their employees to be able to handle, even if they're home because they have the flu. It doesn't have to be the next pandemic.
Yeah, absolutely. And I think you bring up a good point, challenges to the internet. But we were talking about media, and I really wanted to talk to you in this first segment. It seems like Americans are home, and I got to tell you, Dan, I can't watch the news on a regular basis because I'm tired of all the graphics and the crazy. It's just so much hyperbole, and it's in my opinion out of control. But it looks like a lot of Americans. Remember we talked about Facebook several months ago, and people not wanting to get their news from Facebook. Well, it seems like, Dan, people are going back to Facebook and Twitter and other sources. So, wanted to get your thoughts on this.
Yeah, it's a very mixed bag. So the problem is, if you see something on Facebook, you don't know necessarily if that's a credible source. Yeah. Now, I would argue that the big names, if it's from the New York Times, if it's from the Washington Post or the Wall Street Journal or the Motley Fool or
the Motley
Fool, credible source, had to plug us a little bit there,
of course,
then it's credible. On the other hand, there is some difficulty there. If I write an opinion piece, this morning I wrote an analysis on the cruise industry, and it's clearly my opinion based on the numbers of how they're going to come out of this, because they won't qualify for federal bailouts because they're not U.S.-based companies. And I basically said, hey, look, these were profitable companies, and profitable companies will be able to find loans if they need them. And because you can forecast whether it's a year or 2 years or 10 years, they were profitable, and someone might read that and not be able to understand that it's an opinion piece or an analysis, take that as a fact, go out and make a stock purchase when this is my opinion. On the other hand, I've written news pieces, like I wrote a news piece about that issue, that they won't be the cruise lines won't be part of the $2 trillion industry. So it can be difficult, even with credible sources, to sort of understand what's someone opining and what's fact. And there is a lot of not credible stuff out there that you have to be very careful of.
Do you mark that your piece is opinion? I'm just out of curiosity. I mean, I do read, just full disclosure, I read some of the thing. I cannot read everything, but I read some of the stuff you talk about. But do you mark it as a commentary or opinion?
We don't. As a company, I would argue that everything we do is on some level analysis and opinion. Even when I write a news brief, there's still some takeaway in it that's my spin on the news that would be a little bit different than if I was working at a pure news outlet. So I think you do have to understand what the outlet does. Can the Motley Fool sometimes be a source of news? Yes, absolutely. I was the first person to report on a national level that Amazon had bought Whole Foods. Got very lucky, had the story already written when the news broke and was able to be on the front page of MSN. So I broke news. On the other hand, most of the content of that story was me explaining what it means, which is analysis. So you have to really look at it, and it's clear when you read my article when I'm delivering opinion and when I'm delivering a fact is quoted or attributed or I tell you where it's from. But when it's a paper that does both, say the Washington Post, there will generally be a note that it's an opinion. Right. And if someone says I in a story, that's opinion. I generally almost never use the word I unless I'm really telling a story about myself, but that's an old journalism thing. And you have to be careful on Facebook. If you're reading a story and you've never heard of something, that doesn't mean it's not credible, but you can easily Google and, is blankety blank credible? And you might see, well, it tends to skew things to the left, it tends to skew things to the right, but it's largely a credible source. Or most of the time, you find, no, this is biased reporting and it's not credible. And you have to be careful. I'm sure you had a relative send you the news story on, drinking water and how that helped. It's a fake story. It's been debunked. But I got sent it a dozen different times from a dozen different sources on all these ways you were supposed to be able to fend off coronavirus. And that kind of stuff is dangerous. Yeah. So you need to check. And I understand there's a criticism of the mainstream media from certain parties. The reality is I've been the mainstream media. I sat at the Boston Globe newsroom for a year. The level of scrutiny that goes into putting stuff out is intense. And it doesn't matter if there's a political bias on the editorial page. Those news reporters are trying to break the story. They are trying to get the news. They are trying to get you a clear picture. So if you're going to look for sources, look for credible sources. Now, there are medical sources you've never heard of before that are incredibly credible. Ask your medical professional friends, is this something you read? Is this something I can bank on? I have a college professor friend who has just started Facebook chains with various, very smart, very well-educated medical professionals sort of telling his wider friends, here's what they're seeing, here's what's possible, here's how these things normally work. There's an amazing amount of true information on Facebook. There's the amazing ability to calm your fears or scare yourself to death. So be very careful.
Yeah, and you bring up a really good point, Dan. Scams of our elderly, scams of younger people, mature people. I mean, it's all over the place in a lot of different areas. We talked about it with regards to tax returns. People need to be very vigilant, one, on what they're clicking on. That's number one. And number two, they need to be vigilant on what they're actually reading and do some assessing of that to make sure that it's viable. I would hate for people to get ripped off. Dan, I want to take a break. When we come back, we're going to talk to Dan about layoffs in Silicon Valley, and there's a lot to discuss there. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Dan Klein, Senior Technology and Consumer Products Reporter with the Motley Fool. Dan, thanks so much for sticking around with us this morning.
Thanks for keeping me.
Well, we always appreciate your insight and your depth and breadth of knowledge and how we're able to go in 100 different directions all at one time. So we appreciate that. Dan, a lot of businesses impacted by the coronavirus, the pandemic, the shutdown, whatever you want to call it, the necessity for a set of stimulus bills, maybe more as of when we're recording this. But Silicon Valley has been hit especially hard. Those tech startups have been laying people off. I'm concerned for all people who are laid off, but that's an engine of innovation. How concerned should I be?
So I don't think you should be that concerned. So the pipeline of investor money is obviously going to slow down during this type of thing. But it will also create new opportunity for investment. Very clearly, just to point out one, we need short-term ability to quickly make a variety of things to deal with whatever the next crisis might be. That might be adapting 3D printers to make masks, or figuring out a way to turn vacuum cleaners into ventilators. That's somewhat of a joke, but you know that Dyson is making ventilators. Yeah. So I think there's going to be a whole new wave of innovation that grows out of this. And look, working at a startup is risky. I have worked at numerous startups, and I've been in a position of, hey, if we don't raise $100,000 at this cocktail party we're throwing, we won't make payroll tomorrow. I've been in that situation an uncomfortable amount of times. The good news is the $2 trillion stimulus package does have some very significant unemployment benefits. It has incentive for larger companies to keep workers on. So this is a situation where if you worked at a tech startup in Silicon Valley, you may not want to go work for Google, but there are job openings at Google. And there are job openings at a lot of big tech that's not being overly disrupted or can shift their capacity elsewhere. So it's not fun if you're the person who's laid off. And obviously, every person who has a great startup job isn't automatically going to get hired someplace else. But a lot of these people, especially coders and other technology people, they have skills that are needed. So hopefully within this 3-month window where they should largely still be collecting a paycheck through the stimulus package, hopefully many of them will find jobs, and others will go on to raise money 2 months from now to start something new that deals with a problem that 3 weeks ago we didn't know existed. I think there's going to be a lot of innovation in how to better televise concerts from your basement, just as a
that'd
small.
Be interesting. That would be interesting. But I think to that end, and with Dyson kind of re-engineering, there are maybe needs. We know that Walmart is hiring. People are going on Amazon. Amazon, we talked about on the podcast, is reprioritizing what goods it's sending out in order to make sure it's meeting demand. So I think there's opportunity, and it sounds like what's happening. And on the podcast on Sunday, I talked to Craig Lazar from S&P Dow Jones Indices, and this velocity, the volatility that we're experiencing is historically something we've never seen. And I think there's a recalibration that's going on. Necessarily or unnecessarily, it's just happening in the economy, and that includes these workers. I think people need, try to be as flexible as you can be. We've all gone through it. Some of us are going through it. It's difficult. I think adjusting expectations, which is something we always talk about, is important during these difficult times, and being flexible.
Yeah, and it's absolutely important to realize that the stock market is not a true gauge of the economy. So if you look at a company and, Amazon or McDonald's or Starbucks, I think all three of those are down. I know McDonald's and Starbucks are down significantly. But if you're going to buy Starbucks and hold it for 15 years or 20 or 30, you shouldn't analyze what its sales are in the next quarter. When I look at a stock, I look at Starbucks and I say, does it have a foundational hold on its customer base? Yes. Does it have the ability to get more money from the same people? Yes. With technology, it can incentivize people to shop more. It can bring them special orders. It can entice them for delivery. Is the overall business being run well? Yes. So if you can look at a quarter and say, here's the reason why sales were bad, then that stock price shouldn't go down. But people buy and sell stocks emotionally. This is not the time to be selling stocks you believe in. And if you own stocks you didn't believe in, then you're playing roulette. You're not buying the stock, you're not buying the stock market correctly. If you're an investor, this is a very smart time to buy index funds, or, if you have a 10-year horizon, the stock market will recover. You can also buy brands at huge discounts that are good companies. And yes, there's lots of work out there. There's not necessarily enough work for the sales guy who was making 200 grand at a Silicon Valley startup, but are we going to need sales guys 3 months from now? I believe we will. So this is a blip. Stay calm. It's not fun. I know I'm very lucky that I'm still working, and it's been a boon time for me. But if there is a downturn, you will get past it. If you get laid off, there will be a tomorrow.
Yeah, I think that's good. Certainly good advice. And just going back to the startups for a second, I know just reading some news from reputable sources, going back to our first segment, venture capital, obviously capital raises very difficult when you can't travel to meet with management. Private equity firms have a ton of capital sitting on the back burner waiting to be invested. So certainly there's money out there to invest, both from institutions and sovereigns as well as individuals like you and I. It's just going to take time to kind of get to where it needs to get to. And I think a lot will happen over the course of the next couple of days and weeks with respect to these stimulus packages, whatever it is, the stimuli that we're going to get from the stimulus packages. And then presumably there may be other packages along the way. So I think that will keep things moving for many Americans. And then, as you mentioned, innovation, something that is part of the American ethos and our DNA. I think it will pop back up. I'm really bullish on that. And, anecdotally, I can't point to anything and say that. Anecdotally, I believe that.
Obviously, the flow of money has dried up simply because of the logistics of it. And your average startup does not have assets to secure loans. Yeah. But this $2 trillion bailout does include significant provisions for loans for payroll that don't always have to be paid back. Now, as a startup owner, and obviously you probably have funders, the question of taking on debt is a significant one. Yeah. So some things may simply pause, lay people off, and if they were good ideas before this, they're probably good ideas after this. The question is, how long after? If your startup was a novel new way to sell tickets to music festivals, well, your recovery might be 6 months before normal happens. I read some quotes from the president of Carnival Cruises, or the CEO of Carnival Cruises, that says after previous geopolitical issues, never health issues, that have caused major disruptions, it usually takes 8 weeks from the end of it to normal patterns to return. Is that going to be true when it was a health-related issue? It might be longer, but the reality is there will be normal for all of these things. Are we going to go to a baseball game next year? I fully believe we will. Will there be an NFL season? Absolutely. Will hockey and basketball play some games in empty arenas? Probably. It's all going to take time.
It'll be checking-free and tackle-free hockey and football. Dan, always a pleasure talking with you. Stay safe, and we'll talk to you again later in the week on the podcast.
We'll see you on the podcast.
And that wraps up this episode of BRN AM. Have a financial topic or someone of interest that you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and so much more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.